the early stage and late stage funding as businesses are at a potential to face higher operational costs due to, say, the 25% tariff that's looming over Canada? And, how can venture funds help bridge that gap?
So, sorry, I was on mute. Okay, so in general, there has always been progressively a growing gap and a preference for investors to focus on companies that are later stage, so proven business models, traction, and that's in large part a reflection of risk in the markets and the appetite for investors to bet on something that is less risky to kind of remove that from their portfolio. So, um, how it relates to tariffs, because I mean it's hard to generalize because there's so many different types of companies that we could be investing in, so many different industries, so many different types of technologies. But to answer your question, for those that are very much focused on the U.S. market, which a lot of the companies that we bring into Canada through the Startup Visa program, or even the Canadian companies that we invest in here, they do have it in their roadmap to expand into the U.S. and take advantage of the massive potential there. And for those companies in that situation, yes, of course, that would have a huge impact in terms of the buying appetite of Americans. So, and in addition to that, when you talk about operational expenses, we don't have too many companies that are looking to buy from the U.S. Like if they want labor, if they want resources, they usually look for the countries that have the cheapest costs, and that's standard business operations. Yeah, so that plays into it. Sorry, I'm getting a little bit of feedback. Yeah, so that definitely plays into it as well. But I could say one thing. When I first started my career in venture capital, I remember hearing a saying, and that is, if you look at the Darwinism of businesses, it's not necessarily the ones that are the biggest or the ones that have the best idea or the ones that have the best technology that are the ones that are able to survive. It's the ones that are most adaptable. So when tariffs are implemented, when there's other shocks to the market, and you're selecting an entrepreneur or a company to invest in, always look at ones that have the ability to adapt and maneuver around these challenges, and better yet, turn them into opportunities. So if you think about tariffs and what kind of impact that might have, if they have a plan to open up a subsidiary in the US, like create a Delaware company for tax purposes, which they could also use as a US entity to sell from, that could be advantageous as well.
Great. Thank you so much. So, speaking of